Hey YouTube, it's Nick here. Welcome back to the channel. We're going to be doing a market watch video today. We've had an interesting week. We're going to be covering tech sell-offs, geopolitical tension, CPI data, PPI data, and crypto, and ultimately what I'm doing with all the news. And if you're new here, I'm a retail investor. I'm not a hedge fund manager. I'm not someone that's built up $1 million business or anything like that. So more than likely, I'm relating to the person that's watching this video. Going day by day, trying to make things happen. So let's just hop straight into it. Stocks are selling off sharply while crypto treads water. Macro is driving, not crypto. So one of the big things is that U.S. regulators missed the Genius Act deadline for final stablecoin rules, leaving a key regulatory uncertainty in place just as equities stumble on broader risk-off sentiment. So to get in a little bit with that is your dollar's going to zero. That major banks, they don't want you moving your money to these other platforms and earning a high yield, because if you take your money out of there, there's going to be less money for them. And that's kind of how they make money off of us, is that the money that we put in, they lend out to other people. You just see the screen and it tells you might have 50K in there, but there's a reason why when maybe you try to send something, or even if you do try to go get your money, sometimes there's a delay with that. Whereas when it comes to these tokenized markets or even crypto, you can move your money instantly. And that's one of the main things that's even driving the Genius Act. So the big banks are fighting back, but it's going to be the future. So how long it's going to take, I don't know. But one of the big things is that the S&P is down 1%. So not a lot. In the Nasdaq off 1.4%, with the VIX spiking 12.19%, signaling a macro-led sell-off that crypto is falling rather than leading. And we also got Michael Saylor's bullish corporate Bitcoin adoption call has not moved the tape as risk appetite tight or weakens, my bad. But if we look at the fear and greed index, this is a main indicator that you do kind of want to look at if you do want to know if this is the time to buy or if I should just wait. Not financial advice, but it is a good tool to help you. So stock market is sitting at fear right now. So 37%. So while we are long overdue for a correction in the market, I talked about this in the last video. It's still good to even be in the market, because even though there's a point where we're probably going to reach a bottom, you don't necessarily know when that bottom is. That's why a little bit of what I do is I just try to keep my money in low cost index funds. So that way it doesn't really matter. Because at the end of the day, all this news, it doesn't even mean nothing in the long run, right? But you need something to kind of get you through the day to day. And it's kind of hard for people to put money into a market and then just walk away from it. A lot of people, including myself sometimes, we want to just kind of see what it's doing every day. And then if you look at crypto, even lower, it's at a 28 on the fear and greed index. And we have the VIX sitting at a whopping 18.77. So here's the thing when it comes to the VIX or anything like that. When you're sitting at that 18.77, more than likely, this is a decent time where you might want to buy. You don't want to buy when the VIX is low, right? Because at this point, this is when everything's firing off cylinders. There's nothing to worry about. Market's just going straight up. But when you invest when the VIX goes higher, that's typically when you can make a profit if you are getting into these markets, stocks or crypto, mainly stocks. That's what we're going to be covering. So if we do look at the stock market, these are basically going to be a list of all the top companies, and it's essentially based on the market cap. So you still have Nvidia that's up there, phenomenal. I don't even think I need to tell you anything about Nvidia. They kind of led the AI revolution as well too with chip making. Apple. It's a big giant in there. You got Google, you got Microsoft, you got Amazon. SpaceX is still up there, sitting at $123. That's incredible. It IPO'd at 130. So I'm not saying SpaceX is a good buy now, but it's kind of getting close to there. But if you kind of look at all the top markets, at some in some shape, form, or fashion, AI is involved with all of them, and not all of them are essentially AI plays, but they still have some aspect of AI involved with them. So don't knock it. It's definitely not going to go anywhere. And the future is only going to get brighter for AI, with not only how far we can go, but how much money you can make as well too if you do get invested in those markets. So next thing I kind of want to cover is the CPI data. So I looked over it, but I did not like I skimmed over it, and I kind of looked at it, and I'm not gonna break down like what each and everything means. The thing that you need to know is that inflation has cooled. And not only that, but the price of services for businesses has cooled too, mainly with transportation and warehousing, things like that. Because a lot of the goods that you buy in the grocery store you go to, or any business you go to, in some shape, form, or fashion, it had to be be transported there. So that plays a cost. Now, with the geopolitical tension that we have, it basically oil prices have went up a little bit because we started we started basically fighting in the Middle East again. Oil and energy prices, those are still going up, but as far as the things that we have to pay for, which would be correlate to the CPI data, a lot of the goods and commodities that we enjoy, they'll take typically the price is not going to keep rising. Now everything's still up. Like if you look at the prices for last year, everything's up, right? And it's gonna keep going that way. And even though inflation's kind of cooled off and it's sitting at around a four, like a 2 to 4%, a lot of people would argue that the real inflation is sitting around 7 to 8%. It's just, but no one's gonna tell you that. So just look at it. Like, look at it. And I think the market kind of knows that too. So keep that in mind. Crypto, that has actually been on a tear a little bit. So if you look here, this is how the crypto market's looking. We're just gonna look at my watch list. I'm not gonna dive into all the other coins, but actually, let me do it. I'm not gonna be biased here. Like even though I think that Bitcoin is really the only thing that matters. I know that there's probably still a lot of people that care about the entire market as a whole, but if you look here, basically Bitcoin dominance still reigns supreme. So you're going to see Bitcoin has the most volume here, has the highest market cap. Obviously, you got Ethereum, you got ARX. Right. We got BNB, Solana, and there's a couple others. You got Zcash. It's kind of doing okay. The whole market been doing okay. That's something I've been noticing so far this month on the weekends. Is typically we've been kind of sustaining everything on the weekend. So it hasn't been that bad for markets, but at the end of the day, I don't think any of this matter. I think everything kind of revolves around what Bitcoin does at the end of the day. So keep that in mind. And what we're gonna do is we're gonna look at my boy Larry Fink. We're gonna see what he has going on. And he's basically going to give us an outlook for the markets moving forward for the rest of the year. And if you don't know anything about him, he's basically the CEO of BlackRock. So he's the person that's buying up your homes, everything that's around you. Like the, I don't know why, but whenever I see this dude, I just know he's trying to make some money anywhere he goes. So, um, good businessman. I'm not gonna down him there, but I'm not gonna keep you guys waiting. Let's see what my boy has to say. Him and Tom Lee, I don't know, something about them.
I believe the role of financing infrastructure around technology, whether it's financing data centers or financing the purchase of chips. As I said earlier, I think we're going to have markets investing in compute. We're going to have a futures market in compute. This is going to be the next revolution in finance, and it happens because of the strength of the United States capital markets having the ability to finance these new technologies. So the United States and other places in the world can be leaders in the new technologies.
You mentioned 50 years, so I am curious. I mean, have you ever seen anything quite like this, Larry? We've got what were the most profitable companies the world has ever seen,
yes,
making a choice to incinerate, wrong word, to decide not to have any free cash flow anymore, to not return capital to shareholders because they have to be part of this headlong race to make sure they are not left behind in the AI future. When I listen to myself say that, there's some worrisome aspects to that, are there not?
And I've spoken to some of the leaders this week and last week in that sector. Their biggest worry right now, supply is not keeping up with demand. And you see that showing up in the value of the memory stocks. Okay, we have more demand for memory than we have supply. Obviously, they've been able to do big price increases. I don't know how sustainable that is. Maybe in 3-4 years we'll have enough supply. But and so what we see.
I'm gonna cut him off there real fast because I actually not on this channel, but I did another video where I was kind of talking about the real price of AI that other people don't want to pay for. Yeah, a lot of them feel like there is not enough supply. They're busting out the data centers, and it's getting to the point where people were getting kicked out of their homes for eminent domain. Like that, like that's how far some of these companies are going in order to build these data centers and get everything up for their grids so that way they can sustain the memory that it takes to power all of these AI platforms. And then on top of that, even if you don't get your house taken away from you through eminent domain, you're also either gonna have to deal with that, or you're gonna have to deal with rising energy costs in your community as well. So if you can actually, I'm gonna just leave a link to that in the description. So if anybody does want to take a look at that, I do dive into that a little bit more. But yeah, that's a big thing. A lot of these companies do feel like they're behind, and all it takes is for one person to kind of break out and bust out and be in the lead, and then basically everyone's gonna dump their money into them. And at the end of the day, when it comes to business, it's all a competition, whether you like it or not. At the end of the day, just had to add that in there.
We see as a big investor in data centers, the demand for compute is not slowing down, it's growing faster. The problem we have as a country, we're not investing fast enough. So I have an opposite.
So we're just not even, we need to do even more. I mean, $1 trillion capex spent from 6 companies, not enough.
I believe it's, well, not just there, we're not investing in our grids fast enough. We do not have enough adequate supply of power. And that's what's creating some of the issues at certain state levels that they're worried about electricity prices for the consumer, which is a legitimate issue. But other states that have more power and more capability of delivering power, and delivering power that is not going to raise the price to the consumer, are going to be the big winners for growth. Yeah. So in the last quarter, we contracted close to 1 gigawatt of power in Pennsylvania. Okay, we're financing another big data center in another state, and in my conversation with every hyperscaler, demand is exceeding supply. And yes, you're right. These large companies used to be balance sheet light, and now their business has changed, and that's the role of the capital markets. And I promise you, these are going to be great investments for individuals.
Right. But you've got to know that the underlying business model ultimately that we get to is going to generate enough revenue and profit to be able to pay for all the data centers. They're not cheap.
Yeah, they're $50-60 billion for a 1 gigawatt. What I worry about then is not the demand side. I worry about, can all of society benefit from AI? Because right now, compute is so expensive. My question to everybody in the hyperscaler business is not whether they have enough demand, is how quickly can they bring down the cost of compute? I'm not worried about BlackRock paying for the AI, and I think we've been a huge investor in it, and our systematic equity team has really benefited with the flows and the return. But I worry about the small and medium businesses. How are they going to be able to compete in this new AI technology world? So the biggest question I ask behind the scenes is, how quickly can we bring down the cost of compute? And okay, they tell me it's like a Moore's law, and how quickly they can develop faster and faster analytics to have faster compute. But unless we develop better technology and better systems in our grid to provide more power, more consistent power, I believe the United States must be power agnostic. We should not care if it comes from solar or hydrocarbons. We have to be there. But we don't have, we need to be manufacturing the solar panels in the United States, building the battery storage. At least we can do the battery storage here.
We do.
So those are my worries. Yeah. My worry about is not a bubble. My worry about we don't have the ability to build fast enough. And then I go watch China. China's building 100 gigawatts of nuclear. They're building close to 100 gigawatts of solar. Okay, they are getting set up for this AI revolution and the need for power. We're not doing this enough. And I actually get frightened when I see states saying we're going to do a moratorium. That's not the answer. The answer is how do we deliver more power quickly? Why don't we all start focusing on how do we deliver more power so we don't raise electricity prices, but we can be the center of the AI revolution.
Can I ask you about?
Yeah. The thing is that the average American, they don't, care. That they do not care about AI or helping Larry Fink get more money, and that because that's something I kind of noticed in the other videos. Like a lot of these people, they don't even care about the data centers being near them, and I think a lot of times these analysts, and I'll keep mentioning this, I think they they don't understand that the average consumer doesn't have the same aspirations that they do, if that makes sense. They're like the average person, and even below average, but just like your common person, they're not trying to, go to the next level and go to a new frontier and look at all possibilities. And a lot of, like, not in a bad way, but like a lot of people are complacent. So like this is like to them, you building a data center in their community is disrupting everything they have going on. I think the main thing is because it's interesting that he didn't mention this, but a lot of people are losing their homes to eminent domain. Like, wow, because there isn't enough energy to power these data centers. And the architects, they're making roadmaps and they're seeing that, hey, we have to go in this area, so we need this much land. There's a house here. Just move, bro. You got to get out. We're trying to be China, right? Like they don't care about that. And I think, and it might be a small minority. I still have to do some more research, but maybe it's because not as many people are being affected by it. Like at a big scale, either because there's like a small percentage of people that are losing their homes to eminent domain with the data centers being built, and then there's on the other side of the coin, there's people that have maybe a $200 $300 energy bill, and now it's skyrocketing up to 50 or 600 because of all the energy that is generating. Now I agree, we can find other ways to create energy. So, and some of these companies are doing that too. They're investing in windmill infrastructure, solar panels, as Fink just mentioned too. So like there's things that can be done to generate more energy, but to power these models in these data centers, it takes a lot of electricity. It takes a lot. It's kind of interesting that they don't mention the people that are being affected by it. They're looking at the numbers on how we can generate more revenue, and like a lot of people, they don't even care about AI stocks or anything like that. Like if they're playing with Chat GPT, like any type of AI, they're just asking a question. It's basically it's become the new Google search, if that makes sense. So like I see his point because I mean, one, if all this does well, my portfolio does well. But at the same time, I think the reason why we're not investing fast enough is because a lot of people that have the capacity to do it, they don't even care. And I think there was another video we did where it said maybe like 60% of people are invested into stocks, mainly like the S&P 500, and that's only like people that have pensions or 401ks. So like a lot like so even then, like while it's a good percentage of people that are in the market, I would argue maybe 50 to 40% of them actually don't even care about the market. Like they probably have an HR job or something like that. I'm just throwing stuff out there, but some kind of job, and they're just kind of just working until they can get Social Security and retire. So a lot like as much as a lot of people care about the market, not as many people care about the market too. So that would be another reason why there's not as much money coming in. And I mean, and I don't like a lot of money has went into AI markets as well too. That hell, that's why crypto and everything's down. So like a lot of the money rotated out of the risk on assets into AI, and they're still saying it's not enough. So that's just interesting.
About leverage, every morning we come in here and we check the Kospi, which was up 9% swings. The South Korean president said the market there she thinks is quite unstable. A lot of it's leveraged ETFs and two big names.
Which we don't really do.
Right. But do you worry about that though? Is it a global risk factor?
No, I really don't worry about. There's not that much leverage in this system compared to 2008, 2009. Now, maybe the Korean market has that embedded leverage in it. There's no question, as I said it in earlier times when I was here, I was always worried about the leverage in Bitcoin and crypto. There was too much leverage players in it. That's why we had a washout, and I think there's more stability at these levels here. But no, we don't see that much implicit leverage. For the scale of the capital markets today, the leverage is not as large. I mean, that doesn't mean there's not pockets. But no, as I said in my prepared remarks this morning, I'm very bullish on the markets over the next 12 months. I think the technological revolution is going to power better margins for more companies. I mean, think about BlackRock. We've raised our margins increased by 260 basis points over the last 12 months. A lot of it is using more and more technology.
Can you keep those margins going? You said you don't see 45 to 46% margins as a ceiling. You pointed back to 2021.
Yeah.
Your business, though, is very different than it was in 21. So I'm sort of curious, what's the mechanism that gets you back above 47%?
Continuing driving more growth in our private markets area, which we see incredible momentum. Continue to drive opportunities in retirement, which I believe these are all going to be creating a better margin, and just making sure that we're utilizing technology as fast as we can to do more with less. I mean, our headcount, David, is unchanged, and we're up $1 trillion in assets. Okay, that's what you're seeing. We're able to use technology to process more trades, to process more activities. So we're able to do that. We're able to leverage our human capital using technology, working alongside of that. We're using the amount of code we're writing alongside our coders with AI is accelerated dramatically. So we're able to do more and more and more. And as the ability of AI and compute, as I talked about earlier, becomes faster and cheaper, that will drive even higher margins for not just for BlackRock, for other firms.
Uh, that was great. And here's my thing. He mentioned something really good towards the end, is that basically even though they have the same headcount as from back in 2021, they still have made just as much money from back then. So I think a lot of people is that when they hear about AI or anything like that, everyone's saying AI is going to be taking all the jobs, stuff like that. That's not necessarily. It's just not. It's not necessarily the case. Like maybe the people who weren't necessarily doing as much, for lack of a better phrase, those might be the people that get the boot. But it's really going to be the people that understand how to use these systems, people that know how to build it. Let's not get rid of that, right? And those are going to be the people that are going to be basically at the forefront of all of this too. But it's not necessarily about you losing your job. It's about increasing productivity. And I think, actually, he's one of the first business people. It's my first time watching that clip. He's one of the first business people I've seen mention that they still had the same head count from almost 5 years ago, which is good because, like, yeah, you could probably save a little bit of money. Like, let's say you have 10 employees, you get rid of seven of them, and then you have three, and then you just have them all use AI. But the people that I at least think that will win are going to be the people that keep the other side of the coin, that keeps their 10 employees and then teach all of them to use AI, right? So you got 10 people using AI versus three people using AI. Who's going to get more work done faster? Right. So a lot of people don't take stuff like that into account. So it's not necessarily about you losing your job to AI. If anything, is you should you should figure out how to be the best it is in what you're doing, and then use AI to enhance that to make your workflow and everything else faster and better. And AI doesn't necessarily like you still have to do the work. You still have to have the knowledge when it comes to using AI, but AI is almost that accelerator that can shave off a couple hours of work for you that would have took you probably 5+ hours to do, and now it's just limited down to 1 or 2 hours. So good thing right there. If whoever doesn't know about BlackRock, it's a big company. They're literally involved in almost everything. Main thing, real estate, and then another thing is they're responsible for some of the crypto ETFs that we've that kind of led the way in revolutionizing how we've gotten to this point instead of the Wild West, what used to be crypto. So if we look at my portfolio, this is kind of how we're doing. Everything this weekend and even this week, I would say in crypto has actually been decent. We're about what nine less than 10% down on Bitcoin, and this has been a good accumulation zone for me, so I'm completely comfortable here. But a little bit of what I'm doing is that I'm still doing about my 16 to $17 a day into Bitcoin. But after this month, I'm gonna stop it, and then I'm gonna use basically the rest of the midterm year or even up to around October or so, using my Coinbase card to generate crypto there. That way, I'm not putting as much money into the crypto market, and I can have my cash just sitting earning a yield. And then, if you want to kind of look at a little bit of the system that I'm using with that, with having my yield also be rewarded to me in Bitcoin, I'll have like a card up for that video as well too. Ethereum, that's doing decent. It's kind of fluctuating, but I think I've started doing my weekly DCA into ETH, but there's a catch. If it's not below, if it's not in the 1700 region or 1600 or even 1500 region or even 1300, I'm not adding to it. So basically, I'll keep about a week's worth about what I would invest into it on the side. So, and it's not much, it's like $7, right? But, and I can multiply it probably depending on how much goes down. But my main goal is that I want to keep, a reserve of cash on standby so that way and I'm not gonna dump the whole thing in either. Like I'll probably put like maybe depending on how long it takes me to build up my cash base. Like it shows it a little bit right here on the screen, but that's not all of it that I have. This is just what's on the exchange. And then I'm waiting for gold to kind of, pop below 4,000. Basically every time it pops below 4,000, I'm just adding like $2, $5 here or so like that. My long term goal with anything crypto related is to have one Bitcoin, which is that'll take years, or it might not happen. We don't know. Maybe one ETH and then one Pax gold coin. That's kind of it. So it, I like investing in gold on Pax gold. That's just me. Fight me. And then if we look at the stocks, we're still continuing. We did drop, and I believe we will drop some more come August or September. But we're still doing the DCA into the S&P 500 through VU, three into the QQQM, the Nasdaq, right? And once we get about one share, we'll stop there, and then we'll just keep building up VU itself alone. And then with SCHD, we're at about 5 shares in my taxable account. I'm still iffy on what I'm gonna continue to do with there, but I think we'll probably get to 6 shares by the end of the month, and then I probably will just buy one SCHD share every week or 2 weeks. That's because I want to build up the dividend income, but I want to be able to have access to it. And keep in mind, I still invest in SCHD in my Roth IRA as well too. None of that's shown here, but I when I do get the dividend as I build up this position, I want to, and I'll pay the taxes. That's fine, but I want to be able to use that money as I get older as well too. And we also got Microsoft in here. So this was gifted to me. Someone signed up through my link. So yeah, like I basically got this for free. And I had basically the two choices that I kind of had was Nvidia or Microsoft to pick. So I thought about it and I was like, which company wouldn't mind holding for the next 5 to 10 years? And I was like, Microsoft. It's in everything. Every computer you have has Microsoft. Windows is designed for it. So that's the one I picked. So we're sitting up here a little bit. It's just $5. So if you don't have Robinhood and if you do want to start investing, a link to that will be in the description as well. If you sign up, you get a free stock. We both get one, and it can be worth any amount of money. So so it's not, but the lowest it might be just $5 worth. So might as well do that. But that's kind of where we're sitting at. The whole portfolio itself, it's over 4K, like I mentioned in another video. So that the goal with that is to obviously next get to 5K. And then once we get past that, we'll honestly we'll just keep on moving, but we're not going to stop. But the main thing that I'm going to be doing moving forward is that while the VIX and everything is high, I'm gonna continue dollar cost averaging because this is typically the time where you should. And I have thrown like an extra $5 or extra $2 into my stocks as well too because it is a volatile time. So keep that in mind if you are investing, is that this when everyone's fearful, that's typically when you should be looking into deploying your cash somewhere and just not having it sit idle. So let me know what you're doing. If you made it this far to the video, that's phenomenal. Leave a like, subscribe if you're new, and I'm gonna be making another video today, but I just kind of wanted to cover that a little bit. Is that this is what's kind of going on in the market. Basically, a lot of the drops that we've experienced has been because of people selling out of tech because and typically this happens at any time in the midterm year, but usually there is some kind of correction because we can't keep constantly going up. If we constantly go up, the crash is going to be that just that much worse as well. So keep that in mind. Again, none of this is final financial advice. Thanks for watching, and hope to see you guys next time. Have a good day. Bye.